Hello guys, good afternoon. Today is Friday, but we're going to be talking about the week's price action and going to be comparing it on a couple of weeks, right? A couple of weeks where we got some really good price action, where we had at least one day of the week giving us a really clean opportunity based on what I personally look for, right? The way that I operate with the ICT's concepts. I don't know what lags or bugs like that. But well, we're going to watch everything from the 5 minute. And as you can see, we have this state separator indicator, right? That allows me to, well, show the week separator, the day separator, show the days and everything, So it's just a little bit simpler to understand what's going on. And then sessions on charts by God knows who. Bye. There it is. Sessions on charts by AURox AIF. Right, that's the guy that made it. If you want to use it, let's simply it. And what I've done is modify the New York session from 7 to 10 as we used to use it, right? And just put New York session. We could also use London session, which is from 2 to 5. 2 to 5, yeah. There it is. Yeah, we'll keep it. I kind of would like to change this into like the I kind of wanted it to begin at 00 New York. I think I'm not gonna be able to do that. I could change the code on it, but I'm not gonna change that. So we're going to begin with today, and today was a little bit beautiful, not gonna lie. I was not able to take advantage of this and took a loss on paper trading down here, which we'll discuss in a minute. But basically, we're going to talk about this. So I mentioned here on this anchored text, on the past few weeks, we've had, on this week specifically, 2 good days, between quotes. This one, honestly, it's actually the 2 that should be in quotes. Because today was a little bit complicated overall, but pretty doable, and we'll talk about it later. But basically, one good day previous week, another good day the week before that, and another good day the week before that. Good day will be a day where the setup we look for shows up and works out. There might have been more interest missed out as we only look for this specific pattern, but overall taking this these opportunities, right? Which again, let's think about it, right? We're talking about, so it's the calculator on this one. We have 20 days. In 4 weeks, we have 20 tradable days, right? As we have 5 days per week. So that means that this week, even if we just had one good trade, which in my opinion, the only good trade that happened this week was on Monday, we only had one good trade per week. That's, let's suppose we took one loss each and every single day, except those days where we took good opportunities or we took take profits, where I at the very least want to take 4R or 5R. Suppose we have 4 trades, that's 20R minus that is 4, well, minus, so 16 losses. That still will allow me to be 4% up, right? And of course, I'm going to show you now that as an example, there are days where the setup or the confluences that we look for just don't show up, right? And what is it that we look for? Give me a second. I'm gonna potentially cut this. Simply enough as this. That's exactly what we look for. Oh god, that's exactly what we look for. And yeah, let's just see what happens when there's a, I don't know what's the name of this in English. But when we have this little bit of an icon here, it means that I want to analyze the day, right? Because I can't really tell or say for sure what would have happened or how, or if I would have actually been able to have my setup or the steps that I look for to take an opportunity. And today was one of those days, because as an example, do I have a big man? I believe that I don't. Maybe I do. No, okay, that's fine. So we have today, right? Today we had this range, right? We discussed it through Telegram. Had a pretty large range that has the low being respected multiple times here, here, and here, and taken here. And then the high, which is the highest point, honestly, then we have a couple of mitigations around here. Nothing around the same level, right? Compared to this high specifically. As you can see, price took sell side and went straight to buy side. And now, I don't know what could happen. I would like it to see this 50% of this previous move being mitigated right here, right? But of course it's Friday, so definitely going to be seeing that next week potentially. So we have the run and sell side liquidity. So we have 5-minute run and stops. Of course, these are lows that we can see from the 1 minute, the 5, the 15, the 1 hour, and the 4 hour as well, probably in the daily chart. Thing is that we have run and stops. So let's actually take the 5-minute out of that, because we just need to run stops. Doesn't matter. Well, the time frame is somewhat irrelevant at that point. we want to see the run and stops. Then 5-minute displacement, which we have, but we don't really have a market shift. I sent a screenshot this morning on Telegram saying that this was the market shift, as we have a high, a low, higher high, right? So that could have been considered a market shift. But in my opinion, would have liked to see something in here to be broken, right, from this move. So we never really got that market shift per se, unless we would have counted for this one. And then we do have fair value gap here that price does mitigate. Thing is that, in my opinion, I would have not traded in here, but we do get a lower time frame entry if we look at it. Price mitigates the fair value gap, and yeah, tiny bit of a fair value gap in the 1 minute, and you can see right there how price triggers it. Of course, we need to consider spreads, otherwise we would have been missed quite harshly on that, because it barely mitigates the fair value gap. As you can see, it goes higher. This retracement would have been difficult. I don't think it would have held through that, honestly. Either I took partials or just gotten out and break even here, but it is what it is. So 5-minute, so run and stops, we definitely have that. We have 5-minute displacement and market shift. Let's say we have it from this break. So now we want to see 1 minute to mitigate the 5-minute/15-minute fair value gap, right? And then give us the lower time frame opportunities. If we go down into that today, of course, from 8:30 and ahead, that's when we trade. 8:30, right here. This is where the market opens, starts going higher, goes lower. As you can see, this low back here is still being respected. A little bit of a range, a little bit of an aggression. Price comes back down quite aggressively, and here we have a fair value gap that we could have taken advantage of. That's the only opportunity that I do think was somewhat worth it today, and it ends up working out quite well, as we'll see in just a second. But basically, this is the only opportunity that we could say was based in what I tend to look for, right? We have the run and stops, we have the 5-minute displacement and market shift. The 1 minute mitigates it, we have 1 minute displacement and market shift, and the 1 minute execution on the fair value gap. Where's our stop loss? Safely, if we want to be safe, conservative, and all, our stop loss is down here. Aggressively, our stop loss is below the low, below the low of the candle that starts creating the fair value gap. So from this point to this point, right? So this will be the aggressive stop loss. Not that aggressive, but still a bit more aggressive. Would have been this low, and again, this would have been the safest. Adding 2 ticks to it should have been more than enough. And target wise, we had multiple targets, but if we've taken this, the range is sell side liquidity, we can definitely expect price to go all the way up there. So this could have been a 7-hour opportunity. So is this something that we could have taken advantage of? Definitely. Do we have the 3 steps? Do we have what we look for? In my opinion, we do, right? We do. What is the only con, and something that I will compare this to in other scenarios? What I like to see is something like this. Let's suppose we are expecting buys, right? We're expecting buys, and this is the 5-minute. 5-minute run and stops. Market shift, we have a fair value gap in here. Price mitigates the fair value gaps, the lower time frames. So we have this fair value gap. Let's use it as this. Price in the lower time frames, getting to something like this. We have a tiny run and stop, market shift, fair value gap, and that's our opportunity. What is the difference if you just look at this and compare it to what we have here? What is the difference according to you? In this case, in this one, the 5-minute market shift and creation of fair value gap happens, and well, in the lower time for mitigating the fair value gap and everything happens all at once, right? Happens all at once, one after the other. In this one, on the other hand, the fair value gap is created almost at the end, and at the beginning of pre-New York, end of London and beginning of pre-New York. And the trigger or price coming back into this, or the step, what we could call step 3 on this, happens all the way up into phase 1, almost at the end of phase 1, right? And that's when the whole thing starts going on, right? So is that bad? In my opinion, it isn't, right? We have the fair value gap. Sure, this fair value gap isn't created after a run and sell side liquidity. This is the fair value gap that is created after the run and sell side liquidity, my opinion. But still a pretty worthy opportunity. But again, what distracted me today on this opportunity specifically was this, right? The fact that I tend to wait for everything to happen together. So as an example, if this would have happened and then we saw the market shift, displacement, and then the lower time frame here, that would have been a whole different scenario, right? Whole different scenario. So if we look for 5-minute, so run and stops, 5-minute market shift and fair value gaps, right? So displacement. What else? Do we have anything else besides from this fair value gap specifically that happens after run and stops? We could say that this, right? Run and stops, aggression lower, fair value gap, this entry ends up working out, but we're counted from A30 and ahead, right? This happens before A30, but is mitigated after, well, it is mitigated before A30, but if we analyze it from A30, we see that price still respects this entire thing. It also comes back down to mitigate order block, or maybe just a fair value gap to fill in the fair value gap, and then continues higher. So in my opinion, this happens before A30, sorry, after A30, even though the first mitigation happens before A30. So the thing is that the setup has to form during the open, right, around A30, A35, something like that, or just after A30. In this case, the setup was triggered here, so around 9:15. Close to what I tend to call phase 3, although I don't really use that concept that much. So do we have the 3 steps here? In my opinion, not the 3 steps, sorry. Well, let's call it 5 steps. We definitely did, right? Could have we taken advantage of this move? Yeah, would have been a little bit more complicated than usual, but definitely. Let's now go to this day. Why am I completely avoiding this day? Because we had news at the open. As you can see, the news caused price to go aggressively higher. Do we have the run and stops? We definitely do. Do we have fair value gaps and market shift to the downside? We don't. We do have a fair value gap here. We don't have a market shift, which would have happened on this point right here. So nothing for us to do in this day, but to avoid it completely. So the X is that we just didn't have anything, or we should ignore it. As you'll see on this one, we also have another news day. And what is that we have? This is A30 open, again, has news, but as you can see, it does cause the break of so run and stops. As an example, what could we say here? Do we have a 5-minute fair value gap? Yeah, we definitely do. What would have we done with it? Our entry would have been on this high if we just traded with the 5-minute fair value gap. The stop loss could have been above that high, stop loss could have been above this high. Either way, what is it that it does? It does get all the way down to this, which could have been considered our target, but taking the time that it did and everything is definitely not worth it. In my opinion, the entry that works out in here, happens in the lower time frames. As you can see, we see price going higher, bit lower, run on sell side and buy side liquidity in the lower time frames, aggression lower, market shift, price comes back up, probably mitigates a fair value gap. And then what do we target? This low, right? So I don't have a replay because I need to get the next account. I haven't made myself the time for it, but let's just do it like this and look at the lower time frame on it. We already skipped that day. Where are we? Here. So run and stops, move lower, aggression higher, run and stops, aggression lower. Not much fair value gaps. Maybe in a 2-3 minute market shift time frame we have a little bit of a better entry, but nothing clear completely. And then we'll again, it does come up to mitigate that and continue to fall, and we definitely do get the target. Possible, but again, if we are looking for the 5-minute fair value gap to then get the lower time frame entries, we didn't get that. So in my opinion, this is not a day we could have taken advantage of, and that is simply it. That's all that we can actually say about it, right? So that's an X. Let's now continue to the next one. This day, let's just completely avoid it. Clearly, we cannot trade that, and we're not even going to try and justify it. What do we have here? I think we have a pretty clean example of what I look for, right? I do remember we had the opportunity this day to take it. So where's A30? This, yeah. This one of Monday didn't have news. This is one of the few days where we could have actually taken advantage of the day, knowing that we don't have news. And what do we have? So London was quite aggressive going higher, then pre-New York was quite aggressive going lower. Tiny bit of a range. As you can see, the sell side liquidity is respected, right? Price goes aggressively higher, takes buy side liquidity, and then you see a fair value gap here that in phase 2 or after the open, we have price creating the fair value gap, trades into it, and then we get the lower time frame entry that we could have targeted down to this low, or could have been a bit more aggressive looking for something further than that. But honestly, I would have gone for this. And if I remember correctly, the reason why I actually ended up avoiding this entire price action, or that opportunity exactly, is because the risk to reward ratio to it was a bit complicated, to say the least, because the entry was this. This was the entry where the first trigger happens here. Stop loss was up here, which is 60, and that's a 122. If we wanted to go even actually a bit lower than that, yeah, a 122, right? If we wanted to go further, do we get the 5R? We definitely do. This is the peak, that's 6R, and even at this peak, we get 5.28, so definitely would have been able to get that. We do get other entries. As an example, we could have tried to execute on this, on the 1 minute order block. We then get another one where we could have used a 1 minute order block or the entire fair value gap. The order block in this case would have been much better. Let's suppose we did it on this one to not be that greedy, right? We could have gone for this, using this as liquidity. As you can see, we do have a couple of somewhat equal highs, right there. Stop loss would have been 40 instead of 60, and down to this low would have been already 3.6R, right? So it's very differently, and something that we could have tried to take advantage of. Peak was at 9.8, and 8 was farther, not far, well, yeah, further up, but basically definitely doable. Did we have an opportunity here? Yes. And this is one of those days where, in my opinion, it worked out quite clear, right? We have the clear run and sell on buy side liquidity, the immediate one, 5-minute displacement, market shift. We could have counted any of these candles. In my opinion, this one was the better one because we have a push higher, which creates a higher high, higher low, higher high. Price breaks that here quite aggressively, which with this beefy candle that we have here, creation of a fair value gap inside of this range. Always keep in mind that when we're looking for a fair value gap that causes a market shift, we want to sell, in this case, we want to sell above the break of the structure, right? So the market shift happens here. We want to find a fair value gap on the structure that breaks the market shift, right? At least that's what ICT says. So yeah, definitely gonna do it like that. So this is one of the good days, and the other day was, well, Friday, which we just saw, right? Even from the 5-minute, you can see that we could have taken advantage of this, selling from this point, and of course from the 5-minute, we would have had a much larger stop loss, but at the same time, not a very bad target, as it would have given us 4.31R, and yeah, that would have been the peak. That's pretty much it. Definitely a really good day. Let's go back to previous week. We have something here. Could have we taken advantage of this? Maybe. We're going to have to look from the 830 only now. So run stops, displacement lower. We have a tiny bit of a fair value gap here. Sorry, it's not the one. Tiny bit of a fair value gap in here. Price, well, actually we never got lower time from confluences. Now that I remember on that, we have a run and sell side liquidity, aggression higher, fair value gap. But even if this would have given us a lower time for opportunity, as you can see, it doesn't go as far as we would have wanted. So we would have not managed to even get out on a break even at the very least. Maybe we would have been able to get out on a break even. I find it a bit difficult, honestly. But yeah, it is what it is, right? So definitely one of those days where we could have taken a loss, right? But so far, this is probably the only day that we've seen so far, again, where we could have taken a loss. So let's do, I'm gonna do something like this. Let's put it here. And let's actually do it like this, right? So you can see what we look for, right there. And we're gonna use another anchor text to say, so 1 win on Friday, 1 win on Monday, and 1 loss on this previous day. Do we have a loss here? No, we never got the confluences we looked for. Do we have a loss here? No, because we had on the lower time frames the execution up there, so definitely not possible. Nothing to do here. This would have been one of the wins, and this would have been the loss, right? So far, if we just go for 4R, we're talking about 4R, 4R, and now minus 1R. Cool. Let's keep it like that. Let's go back. We already saw that one. Let's see this one. So we have news, clearly. A couple of news. Oh, I think this was the day that the euro had like multiple news at the same time. As you can see, price goes aggressively higher. Sorry, lower, aggressively higher, lower, and then higher to continue lower. We do get this example. We definitely have a run and stops. Aggression lower, but the 5-minute doesn't create fair value gaps, and honestly, nothing for us to do. This could have been a sell from this fair value gap here. Maybe we get something in the lower time frames. I'm not really sure, but this is definitely something that we would have just avoided, as most of the day is just filled with news, and the impulse of the day, which in my opinion we tend to get 1 or 2 impulses at maximum. This would have been the impulse of that day, and we definitely would have not been able to take advantage of that unless we have things in the lower time frames, which again, I prefer to see this, right? The 5-minute displacement, then the lower time frames thing. This was, I made a video about this day, definitely got the lower time frame opportunity. We definitely got everything that we look for this. And I think we, up to this high, we would have gotten around 7R if I remember correctly, but let's just use this little bit of a fair value gap here on the 5-minute and use it with that. We definitely get 4R up to that, and if we wanted to go further, which I definitely would have not all the way up to that, that would have been 11, so let's just call it 4.5, right? As you can see, even though, of course, I said at the beginning, like, we could say that every single day that we actually don't get a clear opportunity, we would have had a loss, right? That's definitely not how can I say this? That's most of the times it's not going to happen, right? Most of the times it's not going to happen because if we don't have the confluences to enter a trade, we're likely not going to catch a loss, right? And if we have the confluences to take a trade, then we might, of course, we could take a loss because this is not a 100% thing, but it's much less likely, right? It's like this loss, right? Which again, well, we really don't know if we would have actually taken the loss or not, but we're going to leave it as that, right? Let's just move on. I said this one, I made a video about this one over in the week resume. I think we discussed it because we had a 15-minute fair value gap in here. The price mitigated, and this doesn't give an entry, but this move higher does, right? So I didn't take advantage of this, and I still don't think that I would have taken advantage of this move, so I'm not going to count it as an opportunity that I would have taken, neither a win nor a loss. Of course, if I would have taken it, it would have been a win, but definitely not a win nor a loss. So we're just going to go straight forward. But we do get what we look for, don't we? Run and stops, right? We have a fair value gap in here in the 5-minute. Can we take that? We definitely can. If we want to look at from the 5-minute alone, we have this entry here. Stop loss could be above this high, which is the candle that creates the fair value gap, or all the way up here, right? Which would have been safer. Peaks at 5.75. Of course, I would have not allowed it to run all the way down to that. Potentially just looking for 4R at the very minimum. But of course, as we don't really have any much of a clean target, it would have been difficult, honestly. Could have gone for that, but it's complicated. 4.5. But again, this is not something that I would have taken, so we're just going to avoid it. This day doesn't give anything, and why is that? Because as you can see, we have this impulse, and price through the entire session trades between this low and this high. Even if we wanted to look for the internal structure of this, we have a run and stops here that doesn't create fair value gaps when going lower. Run on stops here, doesn't create fair value gap, doesn't create, and then creates them here outside of the session, so nothing for us to do. So yeah, it's just clear day that we would have just completely avoided. This has news around the open. As you can see, it goes aggressively lower, aggressively higher. This was a Friday, yeah, so NFP Friday, September 2nd, just avoiding the entire day. No need to risk it at all. This is a day where we took this really lovely trade. Have a 5-minute fair value gap, but also a 15-minute fair value gap when going above this high. This was the low of the fair value gap in the 15-minute. Price trades into that, aggressively goes lower, creates a fair value gap. And again, what we discussed earlier, this is where we want to be looking for the fair value gaps to show up, right? The structure that causes the market shift. As you can see, in the 5-minute, we get this low to this high, price trades into that, and that's where we get the lower time frame entry, which works out quite lovely. This is a trade that I avoided on my funded because it was a low risk to reward ratio because we were looking for sell side that we had close. I think it was this low. Yeah, probably. And as you can see with the news that we had around 10, 10 New York basically works out quite lovely and gives us more than expected. So we'll call it 3R. Because if I remember correctly, that's what it was for 2 point something R, if I'm correct on it. Here, do we get the confluences that we look for? Yes. Why? Because we have, through the session, we have price going against the trend. Sorry, not against the trend. Running outside liquidity. We have even a little bit of an extra here where price mitigates a 5-minute fair value gap, right? Also, this came from sweeping a lot of sell side liquidity. Yeah, where we below this range is sell side liquidity. So we have that, and then we have this other entry right here, right? So run and stops with this low. This low is broken by this 5-minute market shift and fair value gap. Price trades into that, and that would have been our entry. Even on the 5-minute, this could have been our entry. And what are we targeting? Well, that would have been difficult, right? Because we could have said the range is high, which is all the way up here. And of course, with the 5-minute entry, it's very low risk to reward ratio. But as an example, even with this next 5-minute entry, which is at that low with this stop loss, that would have been a much better risk to reward ratio. Although again, still a bit lots, probably less than a lower time frame execution. So let's just call it 4R to give it an average 4R. So definitely would have taken a buy on that and would have worked out quite lovely. This one, session begins down here. So we have run and stops. I do remember I took a loss on this one. So we have run and stops, aggression higher, 5-minute market shift, fair value gap in here, price trades into this. I don't know if the loss was here or here, right? Either way, this would have been a loss. We definitely get what we look for, but nothing for us to do about it, right? But definitely after the run on this stops, do we have, this is the market shift, right? Do we have any fair value gap on between this move, between this low and this high? No. Where do we have the fair value gap? Well, the fair value gap happens here. Price trades into that, and it does give a lower time frame entry, which it ended up working out if I remember correctly, and I did take this on paper trading and would have worked out quite lovely. So did I already put the loss? I don't know if this was from the previous day. No, we didn't take a loss on the previous day, so definitely already added it. So yeah, lovely price action. Would have missed out on this one. Would have taken a loss on this one, and it is what it is, right? And I think this is the last day we can see. I don't actually have an entire week ahead. So do we have a run and stops, 5-minute fair value gap and market shift? Market opens here. Could say that this is run and stops, but we don't really see much fair value gaps being created or clear fair value gaps being created. Goes aggressively higher, and that's where the session ends. Even if we would have traded this, right, the stop loss would have been all the way up here. As you can see, price doesn't really move much, and I would have not held through the entire thing, right? So can we call this a loss? I don't remember taking this sell, and I don't think we should have, but let's just call it a loss for this is not backtesting, but backtesting sakes. Price moves lower. We have run below this equal lows, right? Was this the day? Yeah. Run on lows, aggression higher, 5-minute fair value gap here, 5-minute fair value gap here. We have market shift. We could say that it's this high or maybe this high. In my opinion, it's just better to wait for this structure to the left. Price creates a fair value gap with the open. So you can see this is the candle that opens. The market goes higher, lower, mitigates fair value gap, and starts going higher. If I remember correctly, we do have a 1 minute, complicated 1 minute entry on this. I'm not going to count it because I would have not taken this, if I can be completely honest. But yeah, we definitely could have taken advantage of this. It would have ended up in a win, so we're just going to avoid this one. And I do believe this was the good day of the week, although no, because if it didn't have this this sign, I would have likely not traded this. So we'll call it as that, a day that has an opportunity, but we would have completely avoided it. So what do we have here? Oh, so I'm not going to show you the left, but we definitely have run on sell side liquidity aggressively. Price goes higher. The fair value gap in the 5 minute in this is unnoticeable, but this is the fair value gap. And we do get a lower time frame entry, but we don't have a market shift, right? There's no structure being broken when going higher and creating that fair value gap. So for me, this is not something that I'm going to trade. And even though it works out lovely, because we would have gone either above these highs, I don't think I would have gone further than that, but all the way up there would have failed, but definitely getting at least 4R up to these highs. So definitely would have been a profit. But again, there's nothing that meets my criteria on this setup. So it is what it is, right? We just miss out on the opportunity. This one, we definitely got an entry on this day. We have run and stops, somewhat of equal highs, right? Aggression lower, fair value gap. 830 opens on this candle, goes a bit lower, aggressively higher, mitigates fair value gap in the 5 minute. Entry in here, if I remember correctly, we have an entry, or this is the execution, one of the two, right? What are we targeting? At least down to this low. If we get to 4R below that, then definitely good. And or yeah, no, we're definitely targeting that because we have these couple of lows here. That's as far as we're going. Could be aggressive and target that, but these are equal lows along with the lows that were created on this tiny bit of a range. That's as far as we're going. So in my opinion, an entry that could have worked out, but I'm not entirely sure if I would have taken this. I don't remember if I took this or not, but definitely. Do we have the steps? 5 minute run and stops. Run and stops. 5 minute displacement and market shift. Yes, displaces. This is the market shift, right? Higher high, higher low, higher high, lower low, creation of fair value gap, trace into that, lower time frame entry, works out, right? Simple as that. Previous day to this, we have this low run into stops, aggressively higher, this price action. We have even here a tiny bit of a run and stops. Aggression higher, a little bit of a range. This is the market shift in my opinion. Comes back down, takes all of the sell side, mitigates this fair value gap, and even besides that, there's a market shift here, creation of fair value gap, lower time frame entry. Definitely get the 3 steps, not the 3 steps, so 5 steps, and a win for sure. This could have been, of course, I'm counting everything as 4R when we're taking wins, but definitely could be more than 4R. Maybe on this one we get 5 or 6R, and the other ones we could have gotten 7 or maybe even more R's, right? But just rounding it down or up to 4R. So do we get steps on this? Run and stops, aggression higher, right? Run and stops. No fair value gap. This is when the market shift occurs. We have a fair value gap here. Does price trade back into that? It doesn't. Nothing for us to do. Missed out opportunity. This fair value gap in here, can we trade it? No, because it doesn't take sell side liquidity. Right? That's as simple as that. Do we get the steps? No, because again, this fair value gap in market shift doesn't have a break of structure to the left, so nothing for us to do on that. And that's as far as we can go. Right? So let's get back onto the calculator and check it out by ourselves for R. Yeah, now I can't use the R here. 4 plus 4 minus 1 plus 4 plus 3 plus 4 minus 1 plus 4. That's 20R, 20% in 4 weeks by just taking 1, 2, 3, 4, 5, 6 wins. So that means that 6 trades in 4 weeks that ended up being profitable against 3 that ended up not. So we're talking about what, 9? Yeah, 9 opportunities and 70% ratio, right? I think. So it's 9. How would I take minus 70%? 6.3, well, it's 2.7. Well, yeah, 65 maybe % win rate or something like that. That could have been this past 4 weeks from August 21st all the way up to September 16th. 6 wins. Again, risk to reward, risk to reward ratio, or the amount of hours that we're getting per trade, will vary, right? Depending on how much you're looking for, depending on how far you allow the trades to run, because of course we have had trades that have run up to 20R, right? Last week we had one of those that, of course, we have to allow them to run all the way up to 20R. And I personally, even if he had the opportunity to go all the way up to that, I'm closing most of it around 8 or 10R, right? I'm very happy with what I can get with 10R. That's a 10% that you can make. And otherwise, I'm taking at least 90% of my position around that area, right? So yeah, reason why I wanted to show you this is because, as an example, this week could have been a little bit harsh on us. Because if you were looking for opportunities every single day and you didn't find any, you could think that the strategy doesn't work out. You could think that you're not trading well. You could think a lot of things, right? But when you look back into what the past few weeks have had, you see how certain weeks or certain days have very clear opportunities, and how other days either have a little bit of an extra complication along the way, such as that day where we had the 15-minute fair value gap that was mitigated multiple times, and then the 1 minute does give us an entry that we could have taken. It would have been a lovely trade because it gives out more than 10 hours in maybe less than an hour, right? And you have others that just work out as we would have wanted. As an example, Monday is a really good one. And we've had other ones that might have worked out even better than this one. But the clear run and stops, the clear market shift and displacement, and the lower time frame entry, which works out lovely, right? These are the days that we have to know how to take advantage of, right? Because they don't happen that regularly, right? Regularly. And yeah, again, not every single day we're going to be trading. Not every single day is going to be a tradable day. And that's because the market is not always giving out these beautiful opportunities that will work out, right? So based on the 5 steps that are written right there up here, right? This is exactly what I look for, right? This is exactly what I look for. If those 5 things show up, I should be taking a trade. Sometimes I don't, because I either am not brave enough to take the opportunity. I'm just scared to take a loss and stuff like that. I'm human. I'm not a profitable trader just yet. From my point of view, I'm working towards that. And yeah, it is what it is. It is what it is. And again, just following these 5 things, of course, you have to understand everything else. That I mean, if we look back into this video, I'm pretty confident that we haven't really talked about the bias of the day, as an example. I was just looking for a run and stops. Well, these 5 things to work out, not even keeping in mind the trend, because as an example, if we followed that, we could have said that maybe we could have avoided a couple of losses, or could have avoided a couple of profitable trades as well, because when you start adding up confluences, you might end up taking away some good trades, as you're probably taking away some bad trades as well, right? And that's something that we run the risk every single day, right? So I think that's all that I wanted to do. Honestly, when we have weeks like this where we either didn't have any clear opportunities, or we had multiple days where we couldn't trade and stuff like that, it's good to look back, see what worked out, see what didn't work out, just revisit the strategy, revisit the basics, and try to understand that, right? Try to understand that, try to work with that, and see if there's anything that you can tweak, see if there's anything that you need to tweak, right? Because in some cases you really don't need to do much to change anything, and you just end up doing it, and it ends up just not working out at all. And that's something that I've been through, and it's really not fun changing stuff when you don't need it at all, right? But yeah, that's pretty much it. Again, these 5 steps, if we wanted to call it 5 steps, is exactly what I look for, exactly what I trade. And this is how you or anyone could have gotten around 20R. Maybe, again, probably more. Could have been just 5R, could have been 3R. I went for 4R, most of them. And for me, that was good enough to have a little bit of a resume, because, again, there are some that could have given us 6, 7. Again, I'm not going all the way up to 10, very likely closing before because that's how I feel comfortable, right? If I can take 5R home, I'm so happy with that I just really wouldn't even worry about anything else, right? So one last time, through the session, right? Through the session, what I'm looking for is a run and stop, right? Run on buy side, run on sell side liquidity, it doesn't really matter. Then price to create 5-minute displacement and a market shift. And the structure that breaks that or that causes that market shift is where I'm looking for the fair value gap to show up, for me to look into the lower time frame and find that opportunity that I want to be able to potentially profit into that potential move, right? That's all that I do, right? That's all that I do. And as you've been able to see, we had multiple opportunities in the past 4 weeks that would have allowed us to be in a pretty profitable state, right? Around 20R positive, probably even more. Yeah, that's all. So I really hope that this was helpful to anyone that needs it. Again, this is something that you should try and do, see what repeats itself, how you can take advantage of it. And that is pretty much it for me. Hope you enjoyed. Hope you took something away from this video, and I'll be talking to you on to the next one.